Hey traders, this is going to be my first use of the Tradingview's recording feature, and I really like it, so we're going to try it out. I want to talk about the Bollinger Band plus Keltner channel signal. Someone in the Discord had added this to their chart, and they were looking at Tesla, and they said, "Oh, look, Tesla looks bullish to me." And I had to correct them because that's a little bit of bias coming in. The signal itself, the Bollinger Band and the Keltner channel, are really just showing and contraction or expansion of volatility. In other words, price movement. And if you want to stay to the end of the video, I'll talk at the end about what each of them are. But let's just dig into it and show you how you can start making money off of these as a trading signal. So we want to wait for some things to happen before we take a trade. We want to wait for the signal to tell us if we want to be bullish or bearish. So let's talk about our rules, our signal rules. The first thing that we want to look for is for the Bollinger Band itself, which is the blue line, to come inside the Keltner channel, which is our pink dots right here. That's basically telling us that both are starting to contract and price is getting smaller and smaller, tighter in a range, which can lead to a potential explosion in volatility or price movement. That's a breakout that we want to play. So that's one of the first things we're going to look for. And we're going to look at some examples to see how this plays out. So I'm going to use Tradingview's replay feature to go back to where a signal such as this occurred right here. So on the next bar, boom, there it happens. Now, we can't just go bullish or bearish based on this. We need another qualification for this. So let's add another rule. So the next thing we're going to look for is for price to break that Bollinger Band. So in other words, I want the price bar to come down to either the bottom or the top blue line and penetrate it. And so we're going to see when that happens. All right, there. We have a signal here where it touches the Bollinger Band. But we don't want to go in just yet. We want one more criteria. Since this is going to be a breakout that we're playing, we want to use support and resistance as our qualifier for where we want price to break. So you can use anything that you want. I like to use nice, simple horizontal lines at highs and lows. Some people use wedges, other people use different indicators, but we're going to keep it simple and just use the highs and the lows. So the big high up here is right here at this high of the bar. And then the low we'll say is this recent low right here. So if I'm going to set this up as a trade, we'll make this a short trade because we're touching the bottom. We want to offset it below that support just a little bit. We want to give it a little bit of a buffer to make sure we get a real break. And then we're going to let that go. Whoops. Okay, so if we had taken it just one penny below that low, we would have gotten into a false breakout. It's good that we gave it a little bit of a buffer. And it did not break, and at this point, we probably want to take off that trade. Let's look at one more. Go back to here. All right. So again, this is where the Bollinger Band got inside of the Keltner channel. And now we're going to be looking for price to hit either the Bollinger top or the bottom, the blue line at top or bottom. Again, we've got a high right here, and we've got a low right here. So let's see what happens. Since we're touching the top, we're probably going to be getting a bullish signal. So let's set up a long position. Again, give us a little bit of a buffer right there. Now it's not going to happen in the past. Let's do it in the future there. And we sit and we wait, see if it'll break that high. Boom. We're in the trade, going long, and now we're in profit. Now you can set it at a default of 1-to-1. Maybe you can get a little bit more if you're patient, but it should lead to an explosion in price. So for volatility to increase. Let's look at a few more. So in this case right here, notice how we have price coming down to touch the Bollinger Band. But notice that the Bollinger Band is not yet inside the Keltner channel. This would be a false signal. This is not following our criteria that we laid out before. Where'd my little thing go? So if we look at our rules, this does not quite follow the order that we set out for the Bollinger Band to first be inside the Keltner channel. And it did not quite work out the way it was supposed to. In fact, it might have given us a false breakout. Let's go back and look a little bit, one more. So again, we have our criteria right here. And we're going to look to play either above the last high or potentially a break of the last low. I would actually probably use the gap down here, but we'll just see what happens at the gap. I like the gaps. So see what happens. See if we get a breakout. Okay, we're touching the top side. Let's set up a long entry just to break the highs. Start with that 1-to-1. And oh, we would have triggered in a little bit earlier. There we go. And up it goes. So that is a way that you can use the Keltner channel and the Bollinger Band to indicate when price is starting to slow down, which can oftentimes lead to an explosion afterwards, a consolidation followed by an explosion in price. Now, if you want a little bit of extra detail as to what these two are, they are basically measuring the same thing. They're measuring volatility of price. And volatility means the change in price. And when volatility increases, that means that the range that price has moved in a given amount of time has increased. And what the Bollinger Band is measuring is the standard deviation from the simple moving average. And the standard deviation is going to be the range from high to low that price has moved within a certain probability from that simple moving average. The Keltner channel is a little bit different. It's measuring the ATR, the average true range, of the different bars from an exponential moving average. Again, they're both measuring the distance that price travels from a moving average. Bollinger using simple, Keltner using exponential. But in the ATR difference is the ATR is going to be the high and low of each bar averaged over a certain amount of time. So in other words, Keltner is measuring the distance of the bars from high to low, how volatile each bar is, and Bollinger is measuring the overall price change away from the moving average. They're two measurements of the same thing. And what they're both trying to do is indicate when price is starting to get very, very close together, which would be a situation sort of like this, where you're seeing a nice little short consolidation, which very often precedes a very large movement in price, like we see here, ahead of it. So, hope this helps you find trading signals. Remember to be patient for them. Oh, one extra little bonus. Let me show you how you can actually set up in Tradingview an alert like this. So, you can either click alert on the chart up here or on the chart. And if we wanted this to show up for us, here's how you would set it up. So this is what the base alert condition would look like. If we have the indicator on our chart, we need to go down to that indicator. All right. Plot. No, we're going to choose where, let's say, the Keltner lower, which would be our little pink dots here. And then the next criteria is going to be choose the indicator once more. And the second standard deviation band lower, which is the blue, is greater than. And so what that's going to do is show us or alert us when the Keltner, the lower band of the Keltner, comes. Oh, I'm actually backwards. 1 second. We need not the Keltner lower. We need the second standard. There we go. Yep. So here we go. So now, correctly, the Bollinger Band, the second standard deviation Bollinger Band, is greater than the lower Keltner band. So when this happens, this alert will fire. And we want to use that once per bar close. Okay, and then we leave that open-ended if you have a paid account. If you don't, you might have to set it every few days. And then, of course, to do the reverse, we would just say that the second standard deviation upper is less than the Keltner upper. And then that would tell us when the upper standard deviation band, the upper Bollinger Band, was coming inside of the Keltner. We set this as an alert, and then Tradingview, which you can send email or show you a pop-up with a noise, will tell you when this happens. And depending on how many alerts Tradingview lets you have, you will be able to have this as a signal to, hey, come look at me, and potentially set up an order and be able to take a trade and make some money. So hopefully this helps. If you want to leave me a comment, I'll respond to this. This is going to be uploaded to my YouTube channel as well, Norox Notepad, so check that out. Good luck, guys, and keep your risk low.